But that's another really good reason, because if you really look at where we are at with in Phoenix right now, we are going to be kind of like this, everything that's happening with the border and all this stuff is really bringing attention to Phoenix. We still have, all the semiconductor building, everything that's going to be happening. There's going to be a lot of news centered around Phoenix. And then when you look at the news that we have going on with building and people investing and moving all their large companies, and it's wild. And I think that in itself, with the sweet honey of a low rate, or a rate adjustment, it's definitely a good time to buy if you're going to buy now, because I think things are going to switch quickly when they do. And it's going to be...
Hey y'all, Katie here with Team EvoAZ, and welcome to the Arizona Monthly Market Housing Update with Matt and Katie, where you learn all about the greater Phoenix area housing market, including information on interest rates, what's happening with housing prices, and tips and tricks for buyers and sellers. Please like, subscribe, and download our episode so that we can continue to get this real news out to the real people.
Hello everyone, this is Ryan Gilliam, Senior Mortgage Banker with Waterstone Mortgage. If you're looking to buy a new home or even refinance a current one, I'm able to help you find the best program and interest rate that fits your specific needs. You could call me anytime directly at phone number 480-635-3035 if you have any mortgage questions or if you're ready to get pre-approved for a new home purchase. Thank you.
What's up, everybody? We are back. It is Katie and
Matt
and
Ryan. I'm included now. All right.
Yeah.
You're included. You're one of us. Welcome to the club. How's everybody doing this month?
Doing great. It's getting hot
Wonderful
out there. So summer's coming.
Yeah, it's getting hot in a couple of different ways, isn't it? So how about that rate update, Ryan?
Yeah, I know we've spoken about this earlier this year, and yesterday was really one of the days that we've been waiting for. And the reason why we had brought this up is because the April Consumer Price Index was released. And, we did see a year over year decline with this number, but it wasn't as big of a drop as we were hoping, because this was unexpected, but used car prices were up 4.4%. I'm sure some of you are feeling that a little bit out there if you're car shopping. So again, no one really expected this, but still, inflation did see a drop even regardless of this. And the big thing is that 43% of this inflation figure is from shelter costs. And the exciting news is that the year over year figures are expected to have a big drop during the summer months. And as we always mention, when inflation goes down, mortgage rates go down with it. So we are expected to see a really nice drop in rates over the next 3 months, which will be interesting, because, when rates do go down, it is going to be big on the news, when inflation drops and rates drop. And at the same time, we're going to combine that with these inventory levels. I know we were speaking briefly about that, Katie. So
yeah, inventory is down. Matt is the guy that checks. Well, I look often also, but Matt is like on top of it every day. So what's the count this morning, babe?
This morning it was based on how I pulled numbers, and that's just going to be Maricopa and Pinal County, everything that's available on the MLS. And we were at 10,781. So that's crazy. And it's what's really interesting, guys, and I don't want to go off on a tangent, but I believe this is very applicable to what you're saying, is over the year, you look at when the Fed really stepped in and started adjusting these rates and making, news of it, was in April of 2022. So if we take a look back on where we were at in May, we were actually at like 6,000, it was like 6,800 homes, the same metric that I pulled. June 1st, we were at 10,600. So from June 1st, we literally went all the way up to our high, which was 19,900. And that was November 1st of 2022. And now here we are full circle back to where we were June of last year.
That's interesting.
That is very interesting.
It is.
Yeah.
I'm sorry, Ren.
Oh, I said that's just unbelievable. I think we all learned, and economics 101, supply and demand. So
right.
as I mentioned, now that rates are going to be dropping and we see such a low supply, I mean, it's just going to be so good for home prices. Though we did see a little bit of a dip, obviously, when rates went to over 7% and inventory jumped up. But it's incredible how quickly we've seen a shift back to a seller's market and home prices going right back up.
I totally agree. So I have some statistics to share from Armless. Can you guys see this? So this is the Armless stat report that came out last month. Of course, we don't have it for this month yet, but it did say that March sales volume and sales price, as reported by Armless, sales volume as expected was down 22% year over year, but the average sales price of a home increased for the second consecutive month, rising 3.4% month over month, an increase of $17,600. And they are also predicting another increase in April as well. So prices are headed up, guys.
I see that and feel that. Yeah.
Absolutely. And another interesting statistic that was also on that same report that I thought was pretty cool that we haven't really talked much about on this podcast. We've talked about inventory levels being low for a couple of different reasons. And one of them is, hey, people are sticking it out in their homes. They've got the 2% and 3% interest rates. And so they're kind of, waiting it out and seeing what happens. But this was an extremely interesting statistic. Again, that was also on the Armless stat report about baby boomers. So boomers we're saying are between 55 and 74 years old. They make up 22% of our population, but they are 43% of our homeowners. So they make up a really significant portion of homeowners. And this survey came out from point.com. So however many boomers were surveyed, almost 70% stated that it was extremely important for them to stay in their homes. So these guys are buying and they're staying put. They're not going anywhere. Interest rates are not, they don't care. They just don't want to move.
Yeah. And I was wondering if it was like more of a is this all mortgages or homes owned by baby boomers, right? So it could be their secondary residence, it could be investments, such like that. Because I
don't know that
that
it's based on mortgages. I think it's just based on home ownership. So
yeah. So, and I don't think they're going to let go too. I think a lot of them are realizing they might have had rentals in their portfolio and they're saying, hey, this is part of maybe our early retirement plan or just a general, hey, this is going to get us to that point of retirement that we'll decide. And I think a lot of them, now that they've seen rents go up the way that they have just in these last 3 years, they're saying, we're going to be hanging on these a little bit longer than we planned because this is going to be a big chunk of our retirement.
Just had this conversation the other day. We have a gentleman that is within that age range, came to us, said, hey, I live out of state. I've got a property in Chandler. It's fairly large home. Bought it a gazillion years ago. My wife and I lived there 20 years ago or something crazy like that. And we're thinking about selling it. So we talked about that a bit. And he's a smart guy. He did his research and he realized that with rents, it makes no sense for him to get rid of that home right now. And so exactly case in point.
Yeah, seeing a lot of that right now. And because, a lot of my past clients, I do work with a lot of baby boomers. I've worked with a lot of them as they've upgraded their house. And it's funny when you talk to them, they always say, that they want that forever home, that they're kind of done with moving, the next house, they want to be their forever house. They put some money into it, upgrade it, and they're not looking to do anything else. So we have a lot of those with the baby boomers. But on top of that, we work with a ton of first-time home buyers. That's the majority of our business. And a lot of them over the past, maybe 5 to 7 years, they were buying their starter home, right? And their plan was, hey, we're going to live in this house for 3 or 4 years, build some equity, and then get into a bigger house, start a family, more rooms, more bathrooms, bigger yard, things like that. And that's the thing, though. A lot of these people that we speak to, they're just they're locked in with such a low rate and they're nervous, that they don't want to buy something new because they don't want to triple their rate right now. So to add this, like you kind of mentioned, Katie, adding this to the baby boomers, I think that speaks to a lot of why we have such a supply issue right now. But hopefully when rates do drop, and as we mentioned, they are expecting, and Katie, if you want to, you could bring up the forecast that I sent over just to kind of show, because I get a lot of questions about, where rates are heading. And we're hoping that, once they do drop to the 5s or maybe even the 4s, that'll hopefully, get people to want to start moving forward.
Oh,
I know a lot of people are listening to us. If you're actually able to see this, that's great, but I'll go through it. The main points that I wanted to go through on this chart is the 30-year fixed mortgage estimates. And this is from the NBA. It's a Mortgage Bankers Association. It came out April 17th of this year. And historically, they've always been pretty good with their predictions. So it does show, obviously, 2022 was high. Mortgage rates were at a 6.6. They're saying they're going to average this year still, even though we're in the sixes with conventional rates, a 5.5. That's a huge drop.
Yeah.
A drop, it looks like it's going to continue into 2024. They're predicting an average of 4.7, 2025 of 4.5, which historically, it's a good rate. We got a little spoiled in 2020 and 2021 with the rates in twos. But, historically, 4.7 or 4.5, which are expected in 24 and 25, are very good rates. And we're hoping that does, get some of these people who are not wanting to move because they have low rates to still pull the trigger, sell their house and upgrade their homes. And another good statistic here is just existing home sales, that shows that, it dropped this year. Part of it's with inventory, part of it's with, interest rates. But it is showing that it's looking to jump quite a bit in 2024 and then again in 2025 as rates go down. So, home sales are only going to be picking up. So, I just thought this was interesting, kind of seeing their forecast.
Absolutely. And I think that we're seeing that fluctuation with the market too. I know Matt and I, with our team, once the interest rates come down a little bit, whoop, whoop, all of a sudden we've got some buyers ready to hop the fence. So still very rate driven, I'm feeling like.
absolutely. Absolutely. And I think we're going to get to this point too, where, there was a lot of uncertainty when it came to rates and when buyers are pulling the trigger, especially over the last 8 months. And, Brian, you've always said it, you marry the house and you date the rate. And I think a lot of people, if they're looking at inventory levels and they're like, well, we know rates could drop in the next 30 days, are those people going to wait and see? And that's one of the things that I'm curious to see what ends up happening. And it's like, what's really motivating, knowing that hey, I can do a refi, but if it's really that close and people are anticipating rates to drop where they're at, they're not really seeing the inventory issue maybe as clearly as they should be seeing it. This could also be kind of causing a little bit of a delay.
Well, and we just saw that prices are going up. So prices are going up. I mean, does it really make sense to wait it out until the rates come down? Get your house now and then refi once that rate hit, next year or something, once that rate hits a better number.
Absolutely. And then Ryan, even like when you look at if you looked at where we're at, what are rates today, like right now on a 30-year conventional?
30-year conventional, they're averaging about a 6.875 right now.
Okay. So if we were to realistically drop into, let's even just say a 5.5, what I mean? That's on the conservative side of, what we just said, that's going to dramatically change a payment. And when you look at how close we are right now in rents for, a standard size home and what that mortgage would cost, they're almost the same. It's like everything's kind of caught up. And I think that's just what's showing what's going on and where we're going to see this demand, because all of a sudden, when you drop to 5.5 and now investors can get rates at 6.5, that's aligned with everything everyone needs to make sense for: long-term investments, short-term investments, buying a home. And these are a lot of the people that are standing on the sidelines. I know we've said this before, but I do see this all of a sudden, boom, kind of happening very quickly, which is going to be strange with this low inventory.
Yeah, totally agree.
I'm glad you brought that up, Matt. Yeah, because investors is one thing we hadn't really chatted about, but I think that they're seeing inventory levels and they know, the millennial generation, one of the largest generations ever, need housing. There's not enough out there, so that they do see a big opportunity to buy some investment homes.
And then,
sorry. We get a lot of calls from investors, wholesalers, things like that, right? Because we're out there, we do a lot of business, blah, blah. Well, that calmed down over, fall, winter. I was like, I'm not answering 500 phone calls a day from investors, starting to pick back up again.
Yep.
Yeah. Yeah, they're reaching, and I think it's smart because I think almost from their stance too, if you're looking for a long-term play, once again, you're going to marry that investment. You can kind of date the rate. So, if you can jump in and get something good, this is a really good time. And when inventory does dry up, it's going to be a very, very interesting situation, especially when it comes to rents. And I think that's where we're going to ultimately see that jump where, let's just say everyone's used to spending, we'll just call it, $2,500 on a starter home as a mortgage or a rental. If all of a sudden rates dip and you can get that 25, $100 home, now it's less than that, all of a sudden the demand is going to spark, and that's when we're going to see our values go through the roof because they're going to match that rental price point. So people are going to say, well, hey, shit, if it's going to be the difference of $500 a month, well, we're going to quickly see that made up in value. So whatever that rate represents in that time, which is probably what, $500 a month on today's mortgage, what would that be, on a monthly payment, Ryan, roughly?
500,000.
Yeah, well, $500 a month. Like, what would that represent in buying power?
Oh gosh, yeah, that'll increase it another 50,000.
Yeah, 50. So that's what we'll end up seeing, this like quick little bounce, I think. And it's going to happen because, where we're at with inventory.
Yeah, definitely. And it's kind of interesting too. We've got a land listing over in Gold Canyon right now, beautiful land listing. It's got gorgeous mountain views. The majority of the calls that I'm getting on that are builders wanting to build out a custom spec, I guess. So that's the majority of the calls that I'm getting on that, which is also interesting to me.
Ryan, question for you real quick. What's your thoughts on jumbo right now? It just seems like they've kind of went up, and it seems like things are kind of settling more on the luxury side of things here in the Valley.
We've seen that, yeah, because the rates are usually a little bit higher than a conventional loan. But, jumbo loans obviously need a little bit more of a down payment. It needs higher credit scores. And we have noticed actually those luxury homes, just because, they're a lot more rate sensitive, obviously. They really haven't been moving as much, obviously. And a lot of them are on the sidelines. They're educated. They kind of know that, they look at the news, they know where things are going. And I think they are just kind of waiting for those rates to drop. And so it'll be interesting to see this summer, as they do, how that kind of picks luxury homes back up as well.
Totally agree. We've been feeling that as well.
Yeah.
Yeah, they're all looking, because we're all kind of watching the Fed as well, because I know I kind of mentioned in our update with interest rates last week, the Federal Reserve, that they did meet, and as predicted, they increased the funds rate by a quarter. So that was expected. But really, it's kind of interesting what they said is they are thinking that inflation is getting under control, and they may be pausing rate hikes, and they may announce that next month. So it's going to be interesting to see how all markets react to that. Stock market might see a little bit of a rally because they know that inflation's cooling, prices are going down. Maybe people will start buying again and borrowing again. But the biggest thing that we're kind of looking for is if they're ever going to look to cut rates. The Fed Chair Jerome Powell said that, he didn't really make any kind of news about it. He didn't really mention if it's going to happen or not. But a lot of the top industry experts out there feel like maybe September, October, instead of pausing, they may drop rates, which could really spark the economy a little bit. So it'll be interesting to see what the Fed ends up doing.
I think the metric that the Fed, and once again, not try to poke the hornet's nest, but I don't think the metric what the Fed's going with on when they're going to drop rates really has to do with the metrics of the economy, but more with like the political timeline. The fact that we are now going into 2024, we've said this over the last 3 years, when we're going to see relief. And I think it's going to be very conveniently correlated to the timeline of our elections, which are where that machine's starting up right now.
Good point. There's a lot of factors, but that's probably a big one too. You're right, Matt.
It often happens though in an election year. Yes, Matt?
Yeah. You know what I mean? And you see that it's politics. It's, everyone's, they're trying to paint a bigger picture. Hey, if they can push doom and gloom or, good times to be more aligned with the outcome of an election, absolutely, they're going to do that. And we've seen that my whole life. So,
yeah.
But but that's another really good reason, because if you really look at where we are at with in Phoenix right now, we are going to be kind of like this, everything that's happening with the border and all this stuff is really bringing attention to Phoenix. We still have, all the semiconductor building, everything that's going to be happening. There's going to be a lot of news centered around Phoenix. And then when you look at the news that we have going on with building and people investing and moving all their large companies, and it's wild. And I think that in itself, with the sweet honey of a low rate, or a rate adjustment, it's definitely a good time to buy if you're going to buy now, because I think things are going to switch quickly when they do, and it's going to be just kind of skyrocketing.
Yeah.
Like we said, temperatures are going up and the market's going up, so it's going to be a hot summer all around.
Yep. You heard it here, folks. All right, guys. If you would like to follow any of our shows, we've got lots of them over here at Team Evo AZ. Lots of juicy real estate, very localized real estate information. And of course, we have the monthly market update every month. So if you want to check that out, go ahead and hop on over to our YouTube channel. We are at Team Evo AZ. That's our handle. If you are more of the podcast type, you'd prefer to listen versus watch, then hop on over to your favorite podcast platform and do a quick search for Arizona Real Estate Radio. Do the like thing. The notifications will come to you, and please download our episodes so that way we get a little credit for it on the back end. This is not a huge production, guys, so we rely on our audience members to support us out there. So if you like it, please support it so that we can get more of this information out to the ears that need to hear it. All right, guys, until next time.
Bye, everyone.
Bye.
Bye, everyone.